material mix and yield variance first. So let me just give you a quick introduction about material mix and yield. Now, a very famous variance known as material usage variance is a one that you have covered in your previous management accounting exam. And usage variance basically is a one that deals with the material quantity. That is, it actually compares the actual quantity that the company has used, and it compares that with the standard input quantity. This means the quantity that is actually allowed to be used. So it's a comparison between what you should have used, what you should have used, and what actually you have used. So the difference between these two is usage variance. Usage variance indicate the difference between the quantity that has been used and that should have been used. So what we do, this material usage variance is broken down into mix and yield variance. But you need to very clearly understand and for objective test as well, material usage variance will only be bifurcated into material mix and yield variance when the condition is when more than one material input is used. This means you are producing a product, and in that product you require two types of material, three types of material, four types of material. For example, you are producing a cake. So in a cake, you require eggs, you require sugar, you require flour. So these are different ingredients that you actually use in producing a cake. So when more than one material input is used, but this is not the only condition that one needs to satisfy. Along with this, another condition is very important that one needs to satisfy, and that is, I think, very much important, which is material should be interchangeable. So it's not just that you use more than one material input, but it is also important that that material should be interchangeable. Now, what is interchangeable? It's very simple. Interchangeable means that interchangeable means that if you are using one material in a lower quantity, so that lower quantity is compensated by using the other material in a higher quantity. Let me give you a very quick example here. For example, you plan to make tea, and in tea you intend to use milk as well as water. So milk and water basically is are two ingredients that you will be using in producing making a tea. So now the question is milk and water more than one material input? The answer is yes. So first condition is satisfied. Second, are they interchangeable? The answer is yes, because for example, if you in producing, for example, 1 cup of tea, for example, you are using less milk, you are using lower milk. So to compensate that, you will use higher water. And if you reduce the quantity of milk, I repeat, if you reduce the quantity of milk and you increase the quantity of water, or I should say, if you reduce the quantity of milk and in order to compensate that, you increase the quantity of water, this means these two are interchangeable, which means reduction of one quantity has been compensated by increasing the quantity of other ingredient. So if you reduce milk quantity and you enhance the water quantity, so yes, tea will be you can make tea. You one cannot say that okay, you will not be able to make tea in that case. Yes, you will be able to make tea even if you reduce the quantity of milk and enhance the quantity of water. So interchangeable means that one ingredient if used in a lower quantity will be compensated by other ingredient that will be used in a higher quantity. So yes, you need to remember, friends, when more than one material input is used and the material are interchangeable, then we work out mix and yield, which means we break material usage variance into mix and yield. Kainat Jamal, today's topics are variances. Our focus towards will be variances mainly, and if we will get time, so I will move towards decision making as well. Okay, so I hope everyone can listen me what I'm saying. A quick confirmation: is everyone with me here? Yes, please. A quick confirmation. Okay, yesterday so many students were asking me about the WhatsApp group link. So please, admin, if you can hear me, just share the WhatsApp link. I can still see the WhatsApp link in the chat box. So please just join the WhatsApp group, because the plans that I want to give to the entire webinar students, I've just delayed that one day just because so many students were struggling to get into that WhatsApp group. We are left with few students now because of the limit in the WhatsApp group. So please just quickly join the WhatsApp group so that I can start giving the plans. Now, coming back to material mix variance. Material mix variance is what? Material mix variance and material yield variance is what? So let's now move towards a past paper question, and from that past paper question we will understand what mix and yield variance is, as my focus was yesterday towards more practical things rather than theoretical things, and I did mention at the start of the webinar that we will focus more towards practice. So now I will definitely start with a question, and let's first discuss few things in relation to mix and yield variance. So the question that I'm starting from here is very much visible today, and you can see the question is in front of you. So I'm start reading the question. So everyone be with me. K company produces omega, an animal feed made by mixing and heating three ingredients. So there are three ingredients used. One is alpha, one is beta, and one is gamma. Okay, those who are struggling to join the WhatsApp group, listen very carefully. You can WhatsApp me on my number. On the presentations, I have mentioned the number. So you just send me the number. So later on, I will send you a group invite. The standard material cost for 100 kg of omega, 100 kg of omega is as follows. So you can see here that you are provided with the input of the material, but this input is for 100 kg of omega, which means I would say that 1 unit of omega actually requires 100 kgs of input. Okay. Now alpha 40, beta one would say it's 60, and gamma one would say it's 20. So cost per kg is given to you. Cost per 100 kg of omega is also given to you. So maybe 1 unit comprises of 100 kgs of omega. Now the mixing and the heating process is subject to standard evaporation loss. Okay. Alpha, beta, and gamma are agriculture products, and their quality and price vary significantly from year to year. So I'm just underlining this because this is giving me an impression that as far as the quality and the price of agriculture products is concerned, so this means there is some kind of a variation in them. Okay. Second, standard prices are set at the average market price over the last 5 years. Company has a purchasing manager who's responsible for all pricing and suppliers contracts. So obviously a purchasing manager is the one who is responsible for all these things. The standard mix is set by the finance department. Standard mix is set by the finance department. Okay. The last time this was done was at the product launch, and that was 5 years ago. So this is something alarming that since 5 years you haven't changed your standard mix so that is something, a bit strange. We have the actual information. It says last month 4,600 of kg of omega were produced using the following input, and we can see the actual details. Also, it says at the end of each month the production manager receives a standard costing operating statement. I'm sure you all know what an operating statement actually is. from the company's performance manager. So production manager received this operating statement. The statement contains material price and usage variances. Okay, so yeah, this includes price, usage, labor rate, efficiency, overhead expenditure, efficiency variances for the previous month. No commentary on variances is given, and the production manager receives no other feedback on the efficiency of the Omega products. Okay, that's fine. Now, let's start with the first part. It says calculate the following variances for the last month. So what are we required to work out is usage, mix, and yield. So the marks are clearly given: 4, 4, and 3. Usage, mix, and yield is what actually we need to find out. So let's start without wasting time. And I'm moving towards my spreadsheet. But before that, I will just show you quickly what the formula of mix variance is and how are we calculating mix and yield. So you can have a quick look here. The formula is actual input in standard mix, actual input in actual mix, then we have quantity variance, standard rate per input material, then we have cost variance. So I'm just putting numbers here just to give you the idea how actually I will be using the formula. So I'm writing here 1, and then I'm writing here 2, and then 3, and then 4, and then 5. So this is the sequence I will actually follow, which means first I will go towards actual input and actual mix. Okay, first I'll find out actual input in actual mix, then I will find out actual input in standard mix, and after that the differences will be worked out. So moving towards the spreadsheet, part A, let me just make it more easy for you to see. So I think it's very much visible. Now starting from the first one is material mix variance, and yes, I will definitely focus on the technique here, that how using spreadsheet you have to solve again and again. I am emphasizing that your examiner constantly complains that students just perform the calculations using the calculators, which is wrong. So don't perform calculations using the calculators. I think it's a big sin if you do, because you are provided with spreadsheet luxury. So please just use that spreadsheet, because you won't get marks in that case. So yes, it's important if you need marks. So it's actual mix in, sorry, actual input in standard mix. Don't try to solve using calculators and then input the numbers. Then we have quantity variance. See how less calculation I will perform. Standard rate, and this is the cost variance. Just follow my methodology. Okay. Now there are 3 products: alpha, beta, and gamma. First, I'm starting with actual input and actual mix, as I mentioned in the numbers here. You can see. So first, let's find out actual input and actual mix by going towards the question. So here we have actual input total in actual mix. In actual mix. So it's simple: 2200. Second we have is 2500. Third we have is 920. I'll use the sum formula is equal to sum bracket open and select everything, just add, because I need to add. So I've selected using the sum formula. I'll press the enter button and I'll get the total. So this is actual input total in actual mix. So this is my actual input in actual mix. Now if I go back to the formula, it says I need actual input now in standard mix. So this means the input, this is the input. Okay, this input is same. As you can see, this input is same But this input now needs to be converted into standard mix. So I'm converting this input in standard mix. So the input is 5620. Okay, this input is 5620. So this needs to be the same input, and I am converting this into a standard mix. So just see what calculation I will perform here. What is standard mix? It's very simple. Standard mix means actually how much percent of material should be used in the product. So if I go back to the question, you can very simply see I can work out the standard mix, and I just do the calculation here in front of you. uh, I need to work out the mix here. Okay, standard mix is what I need to work out. So it's very simple. For alpha in a product, 40 should be alpha out of 120. Okay, this is standard mix. For beta, it should be 60 in 120. So in 120, 60 should be beta, and 20 divided by 120 should be gamma. So this is your standard mix, this which actually indicates that how much of the ingredient should be in the product. So I can say that, for example, the total input per unit is 120. So out of this 120, 40 should be alpha, should be, which is standard, and 60 should be beta, and 20 should be gamma. So one says should be, which means this is the standard. I can give you a very good example here. Have you ever seen those boxes, spice boxes, where you can purchase spices uh, from anywhere around the world? You get different spices for different food items, right? So for example, if you need to make some kind of a curry, so you bought a spice boxes for that. So that box always usually have a recipe behind that box, and that recipe is a one that tells you that you should use certain ingredient this much, you should use the other ingredient this much, which means 1 tablespoon, 1 teaspoon. So basically that spice box indicates you the recipe, the mix, and that is known as standard mix. So this is the standard mix. So having said that, I now what will do, I need to use this standard mix, and I need to apply this standard mix on my actual input. Okay, so I'm applying this standard mix, that is 40 divided by 120, 60 divided by 120, and 20 divided by 120 on the standard mix, sorry, on the actual input. So you can see here what I'm doing here. It's very simple. I will open the cell is equals to bracket open 40 divided by 120, as you saw before, multiplied by it's very simple, 5620. So you can see this figure 5620, and what I'm doing is that I am using the actual input of 5620, and I have bifurcated that using the standard mix. So I'll just copy this through Control C and will paste into the next two boxes, and I'm getting the same answer. So don't worry, the small change I will make here is very simple. I'll just go back to the question to verify the numbers. So for beta, we require 60, and for gamma, we require 20. Okay, so the minor change that I will be making here is I'll just open the cell and will make this 60 for beta, and will make 20 for gamma, and here you go. So now we have worked out what we have worked out, very simple thing. This actual input, you can see this box, the highlighted box, you can see this highlighted box, right? So what I've done here is that this actual input have been converted into standard mix. So you can see the calculations as well, and this is what we are required to do, just to give you a proper confidence over this. So let's just add these three and see the sum is how much. So if I add these three, the sum is 5620, which is same as actual input. So I hope this is clear. The actual input has been now bifurcated into standard mix, and you can work out the differences. So let's work out the differences. The first column, yes, obviously we'll use first column first. First column minus the second column. First column minus the second column, and I'm getting a negative answer. As I have inputted the formula, so I just need to copy paste Control C, and I will paste here Control V. So once I've done that, so I will be able to see the differences here, and once I will sum these differences together, as you can see I'm doing that, sum differences together. So the net answer is some different sort of an answer, but doesn't matter. This answer is basically 0 here. So once I just round it off, or just, yeah, this is 0. So you can see this is 0. So this is the indication. If in a mixed variance the quantity is getting 0, if the quantity is getting 0, so this means it's right, it's going right. Okay, it's if the quantity is getting 0, so this is right, and yes, this is right, as you can see. Now standard rate, it's simple. 251 251, I can see the numbers here. 251, I'll multiply the quantity difference with the rate. You can see a simple multiplication formula, and 653, just copy paste, and I am getting the other answers as well. So you can just cross check, yes, proper multiplication done, and yes. So let's work out the final answer, and let's apply the sum formula again here, and you can see the sum formula have been applied here. So once I use this sum formula and just work out this, so the answer that I'm getting here is 913.3333, and this answer is basically the answer of material mix variance. So I hope this is clear to all of you, how actually we are supposed to work out the answer. So it's 913.33. Now by looking at the formula, we I think have done the right workings, and everything is clear. So now I just want to discuss how to copy paste. Mohammed, I can't see your complete name. It's very simple. Control C is on your keyboard. For copy, Control C, and wherever you need to paste it, so you can use function of Control V, and just then press the enter button. So you will be able to paste that figure. Okay, so now it's very simple, done with the workings. If you need to just make some boxes and borders, so that is all possible, but this is Microsoft Excel. Remember, the platform that I used yesterday is a one where the options are limited, but still using that also you can even use these borders. So you can see this is material mix variance. Now I'm going towards the area of theory in order to discuss the positives and negative aspects. So material mix variance could be favorable, or material mix variance could be adverse. So now let's quickly discuss what favorable and adverse means. So it's very simple. Remember, mixed variance is what? Mixed variance is a difference between standard mix and actual mix. Okay, if you say what is the definition, so I would say mixed variance is a difference between standard mix and actual mix. So it's a difference of mix versus mix. Now it's very simple to understand. As you can see here, the actual mix that we have used is 2200. Okay, but according to standard we should have used 1873. So in actual we have used more, and when you have used more in actuals, which means you have used more quantity. And when you have used more quantity, obviously this is what? This is adverse. Using more material quantity is adverse in quantity wise, and in terms of cost, this is 653. So you can see here that you have used more material quantity. When it comes to beta, so you can see here the actual beta that we have used is 2500 according to actual mix, but how much we should have used according to standard, according to the recipe, how much we should have used. So we should have used 2810. This means we have used this less in terms of actual quantity. We've used less, and whenever you use less quantity, it's favorable. Then you can see here that in third case, you have used 920 actual, which is gamma, 920 actual, but what you should have used according to standard, it should have been 636, which means in actual you have used less again, and when it's less, so this is favorable. So let me just quickly tell you the concept of interchangeable. Come on, listen. Interchangeable. I am showing you the question again and again. Whenever I'm using the numbers, I am showing the question. So, dear James, no, yeah, Muhammad Tayyib, I'm showing you the question. So, see now, beta and gamma, together, if you see 310 plus 16.667, beta and gamma have been used less, and in order to compensate this 326 material used less, you have used more what? You have used more alpha. So you have used more alpha in order to compensate the less use of what? Beta and gamma. So you can see beta and gamma have been used less. In order to compensate that, we have used more alpha, and that is why the net difference is 0. So this is interchangeable. Okay. So interchangeable definitely means that you have used certain material in a lower quantity and certain material in a higher quantity. So you can see this is what I am doing. Now, moving forward, what the final figure is. Is the final figure positive or negative? Okay, now listen. First of all, very simple method. Very simple. When you get answer in negative, this is adverse. Mathematically, this is adverse. And logically also this is adverse, because I just told you, you have used more quantity. When mathematically your answer is positive, here you can see positive answer. So mathematically, positive answer is favorable. So you can learn very easily. If the answer is negative, it's adverse. If the answer is positive, it's favorable. This is mathematically. And logically, if you see, so it's very simple that you have used lower quantity. And whenever you use lower quantity, it's what? It's favorable. Okay. So mathematically, you can even figure out whenever the answer is positive, that this is favorable, and whenever the answer is negative, this is adverse. But logically as well, the same result will come when you have used more quantity, as you can see in case of alpha, so this is adverse, and as you can see in beta and gamma, you have used less quantity, so this is favorable. So what is the final answer? Is the final answer positive or negative? 913 positive or negative? So it's favorable. And when it's a positive answer, it's favorable. So 913 is favorable. Mathematically, 913 is favorable. But what reason you need to learn for this? What reason you need to learn for this? Why this is favorable? Okay, math wise, agreed. When positive, it's favorable. But what reason is for favorable? So let's go back to our handout and see. When the mixed variance is favorable, it means cheaper material has been used more and expensive material has been used less. So keep this in your mind. Cheaper material used more and expensive material used less. So let's have a look here quickly. You see, out of the three, which is the most Okay. Out of the three, which is the most expensive material? Okay. The most expensive material. Is this the most expensive? Yes. I'll write here. Most expensive. Okay. Most expensive material. So you can see the expensive material has been used what? More or less. So expensive material has been used less because it's favorable, have been used less. So expensive material has been used less. And that is why you are having a saving here. And that is why you are having a saving. This 1550 is a saving for you. Are you getting the point? This 1550 is a saving. So the expensive material have been used less and that results in a saving. On the other hand, you can see the cheaper material. The cheaper material is this one. Uh, alpha. Alpha is a cheaper material. Yeah. So the cheaper material, alpha, adverse means what? More use. So we have used more alpha. So we have used more alpha. And when you use more alpha, so being cheaper, okay, one would say it is a cheaper material, but you have used more alpha. More alpha. So you have incurred additional cost. You have incurred additional cost. But don't you think the saving is of a greater amount compared to cost? The saving of 5 is much greater than the additional costs that you have incurred for alpha. Okay, so it's simple and very obvious that when expensive material has been used less, so that results in a saving of a greater amount, whereas the cheaper material has been used more, that results in additional cost. But as the expensive material has been used less, so that provides you a bigger saving, and this is the saving. So this 913 is a saving here, and this net saving is because, very simple, expensive material have been used less, whereas cheaper material have been used more. So whenever it's favorable, guys, remember cheaper material will be used more and expensive material will be used less, and that results in a favorable material mix variance. I hope this is clear to all of you. When it's adverse, it's vice versa. So let's look at the vice versa. If adverse means, what is the vice versa? So in case of adverse, it will be cheaper material used less and expensive material used more. So when you use expensive material more, so that results in more cost, and you use cheaper material less, so that provides you a saving. But again, the net cost is what makes this adverse. So I hope this is clear. The reason for favorable here, and favorable reason I can easily show. Expensive was beta, have been used less, and cheaper was alpha, has been used more. Now, after discussing this, let's move towards the next variance, and that variance is a yield variance. So see how less time will I waste on yield variance and would work out that in a very fast way. So see what I'm doing. Come on, be with me. Do look at the workings. It will not take much time. So I'm just doing one thing. I'll just copy paste the entire working. I'm doing the entire working here, and you can see I've just copy pasted the entire working, and you can see everything is here. Now I will make the necessary change, but before that I will move towards the formula sheet to see what formulas do I need to follow for yield. So you can see for yield it says standard input in standard mix, actual input in standard mix, quantity variance, standard rate, cost variance. So this is exactly same. So what first thing I'm going to do? Listen everyone. This is very simple. First this, then this, then, then, and then this. Now, if you observe, so this and this is same. Wow, this is same. This and this is same. So using spreadsheet, you can save a lot of time, a lot of time. See the technique. This is same. So you already have done the working for this first column of mix, which is exactly same as the second column of yield. Okay. So what I can do is I can just copy paste the stuff of this here. The first column of mix is same as the second column of yield. So one thing is very simple. Let's rearrange the formula. Let's make the necessary change. Standard input in, actual input in standard mix. And you can see, let me just highlight this. These are same. So let's copy paste the stuff. Yeah, copy, paste. See, copy paste because this is same. Wow, so easy. Copy paste. So done with this one. Just copy, Control C and paste, Control V. That's it. Okay. Second, let me just change the name of the variance. Otherwise, you will think that I'm still working the same one. It's yield. Now, as per the formula, the second is standard input in standard mix. Okay. So standard input in standard mix. So let me make this standard input standard mix. So how do we calculate this? Standard input in standard mix. So it's very simple. If you just need to know the formula, so I can just let you know what the formula should be. It's a very simple formula, that is standard kg per unit multiplied by actual units. So do remember this formula, that if you need to work out standard input and standard mix, so it's a very simple formula, which is standard kg per unit into actual units. So I can just use this one and do my workings. Now for that I need what? I need standard kg per unit. So do I have that? Yes, I do have. You can see here, let me just rub these things and let's make this clear. So yeah, these are the standard kgs per unit for alpha, beta and gamma, standard kg per unit. And the only thing I need is actual units. So right now, do I have actual units? The question is, do I have actual units? Yes, guys, what do you think? If I just go towards the actual information, so it says 4600 kgs. So we do have kgs actual, but not units. So I need units. So is it difficult to work out units? Not at all. I have 4600 kgs. Mohammed Munam, I cannot understand your question. So 4600 kgs is the output, and I need to work out units. So it's not difficult. 1 unit of omega contains 100 kgs, right? 1 unit contains 100 kgs. So if 1 unit contains 100 kg, and if we have produced 4600 kgs, so if I divide 4600 kgs with 100, so I will get the actual units. And what will be the actual units? It's simple. We can work out the actual units here. So 4600 kgs is the output, and 1 unit requires 100 kg. So if I divide 4600 with 100, so the answer that I will get, let's work out the actual units. 4600 divided by 100, so it's 46 actual units. 46 actual units. Yeah, you can work out yield total method as well, but just wait for a minute and see how quickly I can work out this. Okay, so 4600 is the actual units that I worked out. for this question. And yeah, this is simple. Actual is 4600 and 1 unit uh, requires 100 kg of output. So keeping this in mind, 4600 units is what we have made. No, it's not necessary to write adverse favorable with every reason. I was just explaining, that is why I did. Can we count loss of material? Mohammed Yasin, this is the trick I have done. I have used the input method of yield variance, and when you use input method of yield, so you ignore the losses. So yeah, this is what I've done here. Okay. No, Francisco, 120 kg is the input here. What I'm doing is I'm saying that 4600 kg is the output kg, right? And output, and 1 unit requires 100 output kgs. This means 46 units we have prepared here. Okay, so now it's all done. Let's apply the formula. Standard kg per unit, 40 for alpha, into units, 46 units. Automatically you will get the answer. See, automatically the magic is again happening here. 60 kg of beta into actual units of 46 and 20 kg of gamma into 46, and see, done. I didn't have to do anything else. And the answer is in front of you. So this is what I love about spreadsheets. So the only thing I did was 40 standard input into 46 units, 60 into 46, 20 into 46, and everything was already done as I copy paste from mix, and I will get the answer. So it's very simple. Now mathematically, see, mathematically, when answer is in minus, it's adverse. So this is adverse. This is adverse. Simple. This is adverse. When it's minus, mathematically it's adverse, and logically also it's adverse. See why logically now? Very simple. Actual input that we have used is 5620, and what we should have used is 5520. So see, compare. What you have used is 5620 for producing the units, and what you should have used is 5520. Now can you compare and tell me, did we use more or less? So it's simple. We have used more by 100. So we have used more. See, so 5620 has been used and 5520 should have been used. So the answer is 100, and this answer will never be zero. Never be zero, because the input is different, and this is input versus input. See, input versus input. So input versus input, because here mix is same, standard mix and standard mix. So it's input versus input, will never be zero, and you've used more by 100, and when you've used more, so it's adverse. So it's very simple. This is adverse by 100. More quantity used, adverse by 100, and will never be zero. So quickly, let me just tell you, mixed variance. See, actual input. So input is same in mix, which means mix results because of difference between what? Standard mix and actual mix. So mixed variance is the difference between standard mix and actual mix. This is the uncommon thing. Input is same. When you come to yield, so in yield, you see common is mix. Standard mix here as well. Standard mix here as well. So remember, whenever things are common, the difference is not of that common thing. Okay. So the difference is because of what? Standard input versus actual input. So it's standard input versus actual input. Then this is the difference. So mixed variance deals with the mix difference, whereas yield variance deal with the difference of input that should have been used and that has been actually used. Yeah, yield means output. Yield means output, but you can even work out using input method. I know yield means output, but I've used input method here of yield. And when I use input method of yield, it gives me a good opportunity to skip the losses. So I can skip the losses by using input method. So that is why I use input method. I hope, Dominica, it's clear. Okay. This is adverse, and you have seen how quickly I've worked out. Now let's move back to the variances reasons. So it's adverse. So let's see why this is adverse. What are the reasons? Number one, poor control over production process. Yes, this results in more wastage, and more wastage means more input would have been required. Okay. The other reason could be cheaper material is used more, expensive material is used less. Now this reason could be a one, and let me just quickly tell you, if cheaper material has been used more and expensive material has been used less, so this can encourage more wastage. Okay, so this can encourage more wastage if uh, cheaper material has been used more and expensive used less. So one would say, okay, this can result in more wastage, and more wastage means that more input has been required. More input has been required, and that's why the input increase. So the two reasons could be for this 100 more input, could be poor control, that is why wastage increased and input required was more, and second could have been cheaper material used more and expensive used less. So this could also be the reason because of which wastage could increase, and that's why more input would have been required compared to what it should be. So these are the reason for variances, and this is the calculation of mix and yield. I've used the input method, and this saves time. As you can see the way I've worked out, so I just need to copy paste the main stuff and would work out the yield variance. Now you need practice so that you get to understand what actually I've done. Last thing that I need to discuss before I move towards the next is the concept of interdependence. What is interdependence? So there is interdependence, there may be, not is, there may be interdependence between mix and yield. There may be interdependence between mix and yield. So you do need to keep this in your mind, that there is a good chance of interdependence, and the best way to find out interdependence is just have a look. One is favorable, one is adverse, and the reason should be same. So if one is favorable and the other is adverse, and the reason behind one being favorable and one being adverse is same, or I should say, because of the same reason, if one became favorable and one became adverse, because of the same reason, if one became favorable and one became adverse, so there is a high chance of interdependence. So let's see, does there chance of interdependence? Let's have a look. Is mix favorable? Yes. Is yield adverse? Yes. So one condition is fulfilled. One is favorable, one is adverse. This is the easiest way to check interdependence. This is the easiest technique to check interdependence. Are you all listening me, everyone? Are you all listening me? So one is favorable, one is adverse, but this is not enough. The reason should be same. So let's have a look. Why mix is favorable? So if I go back and just try to rub these things, Why mix is favorable? So for mix, there is just one reason. For mix, there is just one reason. And the one reason is cheaper material would have been used more and expensive would have been used less. And because of this, there is a high chance that more wastage will arise. Okay. More wastage will arise. And if there is more wastage, so one would say this will have an impact on yield. So this is the same reason. This is the same reason. So one is favorable, one is adverse, and the reason behind these two is same. And when the reason behind these two is same, so there is a high chance, I'm saying chance, of interdependence. This is one new innovative method that I've invented to find out interdependence, and you can use every time between different variances. And that is, what is the rule, guys? Come on, tell me. One should be what? Come on, write it. One should be what? Favorable. Second should be what? Adverse. And the reason behind these two should be what? Same. If the reason is same, there is a high chance. Write it. Come on. High. Just write the word high chance. There is a high chance of interdependence. Are you all listening me? So yes, there is a high chance of interdependence. Okay. So there's a high chance of interdependence, but when there is both favorable, when there are both adverse, so in that case there will be no interdependence, right? If both are favorable or both are adverse, so you can see here that this is an area where there is high chance of interdependence. That is, one is getting favorable and it is making other adverse. Interdependence means what? One is making favorable, one is getting favorable because of the reason, and it is making other adverse, so there is a high chance of interdependence. So yes, this is interdependence. Now the next part of this question was to work out yield variance. So as I mentioned, that yield is basically the further bifurcation of mix and yield. So one would say, okay, it's very simple. If you need sorry, I beg your pardon, usage variance. If you need usage variance, one would say, okay, it's very simple, just net off mix and yield. That's it, and you will work out. Just net off these two. Just net off. And this is usage. And the answer is favorable. Just net off these two and you'll get favorable. No, this is not required in section C. Had it been section A, had it been section B, you could have done that. You could have done that for section A and B, because in that there is no calculation required. But when this is section C, you cannot just net off these two. You cannot just net off these two. So you have to show the calculation. So let me give you a quick idea, a very good idea. You need to understand the easiest method. Come on, first, people just let me know, are they interested in understanding? Then I should make an effort. If you're not interested, then I should not. Come on, say, you need to understand the easiest method. People are not responding, not interested, right? You are. So let me tell you a very quick shortcut method, and don't tell anyone, please. Okay, this is a secret, right? Please don't tell anyone. So it's a very simple method of calculating usage variance, because you are awarded with 4 marks. There are 4 marks available for this. How can you just net off? So to show the working. So best way is, remember. And what's that way? Let me just make this fill. Okay, what I've done is I've just copy pasted the format of mixed variance. Just copy pasted the format of mixed variance. Now, the secret is what? Use the first column of, use the second column of mix. What? Write it down. Use the second column of mix. Second column of mix. See, I just copy paste that. Use the second column of mix Okay, and the first column of yield, the first column of yield, use the second column of mix and the first column of yield. See the magic, guys? Magic done. Magic done. The answer is 580. Liked it? Hardly how much time this took? Hardly seconds. See, it's the same answer. Come on. What do you think? Good technique. Yes, guys, good technique. So, it's very simple. It's very simple. First column of mix, first column of mix and second column of yield. That's it. So you can just copy paste first column quickly and you can just copy paste the second column of yield, and here you go. The answer is 580. So this minimizes your time, and yes, I hope you like this. Come on, what do you think? It's good or not? No special feedbacks for me right now. I think people think, okay, no, this is a normal thing. Any special feedbacks? Okay, let me show it again. See, first column of mix. Sorry, my mistake. First column of mix and the second column of yield. Sorry. I'm saying the other way around. The second column of mix, I just got excited, second column of mix and the first column of yield. Okay, second column of mix and first column of yield is the secret to find out usage variance using this spreadsheet. Yeah, I just got excited. Okay, so friends, I hope this is clear. The trick is clear. First column of yield and second column of mix will give you usage variance in a very short period of time. So I hope this is clear. Now, let's move back to the next part. Discuss the problems with current system of calculating and reporting variances for assessing the performance of production manager. Now, friends, the theoretical part. And I love theory, yeah? When it comes to theory, I love theories. I love to make things easy for you people. So, let's go back to our presentation. This is the question. So, what is the examinable verb? Yesterday, I did introduce verbs and objects. What is the verb? The verb is discuss. What is the object? The object is problem. But what problem? Problem with the current system of what? Calculation and reporting variances. This is the object. If you are not understanding the object in the right way, my friends, I am afraid you cannot write in the right direction. So discuss the problems with current system of calculating and reporting variances for assessing the performance of production manager. So is this is knowledge based or application based? What do you say? Knowledge based or application based? Knowledge or application? Come on, reply everyone, be very fast. Application or knowledge? Application or knowledge? Just write it app. This looks cool, app. Knowledge or application based? So this is application based because you have to discuss the problems with the current system of calculating and reporting variances according to scenario. Okay, now listen what I'm saying. Paragraph. Listen, in variances, there are two types of question that can come for theory. This is my expectation. Okay, one, to assess the performance of managers. This is a very common question that comes in variances, to assess the performance of the manager. Right now, this is not the question. I'm telling you a very big insight, a secret of the examiner. This is my observation. The variance theory question, which is tested a lot in the exam, is a one where you're required to assess the performance of the manager, like purchase manager, like production manager, like sales manager. Okay. Right now, is this a question of assessing the performance? The answer is no. Right now, this is not the question of assessing the performance of the manager. The second type of a question that can come will be entirely case study based. The question would have created a story, and that story is a one that you need to read and find out the things. So this is the common question that comes a lot. Assess the performance of the manager. Even though for this you also refer to the case, but this is a predictable question that comes a lot in variances. You have seen a lot of questions like secure net, like truffle company, like school uniform company question. You can see crumbly cakes. You can use safe soap company. There are so many questions where you see the assess the performance of this manager. But this other type is a one where examiner can make any story and ask you. So this is basically the second type, where you are not required to assess the manager's performance. Look at the object. The object is discuss the problems of calculating and reporting variances. It's not about assessing the performance of the manager. It says discuss the problems for calculating and reporting variances. Those are used for assessing the performance of the manager. So many would write about performance of the manager. No, you don't have to judge the performance in this question. This question is a special case, a special what you call requirement of the examiner, where the examiner is asking not to discuss the performance of the manager, rather tell about the problems for the calculation and reporting of variances that are used for assessing the performance. I hope you are getting my point, what I am trying to emphasize. Are you getting it? So this is the common requirement of the examiner. But recently what I've seen, examiners has changed a bit and have started asking something different as well. So this is the different part that I just mentioned. I hope this is clear. This is a secret that I just told you. There are two possibilities that can come in the examination as far as the theory is concerned. The common is assessing the manager's performance, and the uncommon is the one that you can see something like this. Okay, now let's go to the scenario and search for the content, as this is application based. Problems. Quickly, I'll solve this in 2 minutes. First of all, production manager I need to keep in mind. Quality and price variances significantly vary. This means they change. And this means if they change, so the impact will be on variances. And by looking at the question, the company hasn't changed certain things like mix. But if you see, they set prices at an average market price, which is average. This is average. So as the price changes a lot, there will be many times production manager will or should not be answerable for it, because significant changes in prices means that this is something outside the control of the production manager. So this is the problem of the current reporting system. That is, the reporting system does not accounts for planning and operational variances that we learned today. Again, the system does not accounts for planning and operational variances, because planning variance do highlight the planning errors, and because of significant changes in the prices, one would say that okay, there could be some planning errors. So we can't say anything, we can't see anything in relation to planning and operational, and this means if price changes, blame is going towards the production manager, so he will be demotivated. Second, the standard mix is set by finance department, which means production manager has no input in mix, has no input in mix. And if the production manager has no input in mix, how can you assess his performance? Because this will be something outside his control. So no input in mix. See, this is all scenario based. First point came from the scenario. Second point came from the scenario. No input in mix. Plus, this standard hasn't been changed since 5 years. So this is an outdated standard. This is the third point. This is an outdated standard. And if this is an outdated standard, you cannot assess the performance. How can you assess a performance using outdated standards? So this is creating difficulty in assessing the performance. This is a flaw of the reporting system. And 3 points I've highlighted in front of you: the price point, the mix point, and the mix hasn't been changed. Moreover, operating statement is given to the production manager. He receives this operating statement, and that includes material price variance. Wow, wow. Why he be responsible for material price variance? Production manager is not responsible for material price variance. How can you held respons how can you say production manager should be responsible for this? This is out of his area. So this is wrong. This is the fourth point. Then no commentary on variances is given. No feedback is given. No commentary, no feedback, no reasons, no feedback given, which means manager will never know what happened, what was the reason, who is responsible for the factors that are outside the control of the production manager, as you are not providing him anything about that, no feedback given. So how you can assess his performance? So if you see, my answer is to the point. I'm not assessing his performance. I'm not commenting about favorable adverse variances. The question says discuss the problems with the current system of calculating and reporting variances. So the problem number one, if someone asks you what is the problem, if someone asks you what is the problem, what you would say? You would say problem number one is your prices vary, which means the right standard will be difficult to achieve, or you need to change the standard again and again, or there should be some planning operational variances because things are outside the control of production manager due to frequent changes. This is the first problem. What is the second problem? The second problem is that mix standard mix has been established by finance department. If finance department is setting the standard mix and manager has no input to this, and if they set some high mix standard, and if they set some wrong mix standard, so production manager should not be held responsible for that, because there is no breakup of planning and operational. This is the second point. Third, standard is an old dated standard. How can you assess performance on an old dated standard? Fourth, price, in an operating statement you see price variance. So what concern production manager has with price variance? He is not responsible for price variance, so why are you showing him price variance? Price variance should be the responsibility of purchase manager. Purchase manager should be responsible for price variance, not production manager. 5. You are not giving him any commentary on the variances. You are not giving him any feedback. How will he able to gauge whether he has done good or bad? Because if there are certain factors which he cannot control, and he is not aware of that. So these are the problems in the system, my friends. And you can see those 5 points. Number one, raw material price variance is the responsibility of purchase manager. Number two, no participation in setting the standard mix, no input. Number three, no use of planning variances. Because if things are not in his control due to price changes, why he should be responsible for that? Number four, the standard mix hasn't been changed, outdated standard. Number five, no feedback, no commentary to understand true picture. 5 points from the scenario. Are you getting my point? 5 points from the scenario. Yes, Rafe, I do agree. Purchase manager is responsible for pricing and supply contracts. But then why are you providing operating statement to the production manager? Why? All above points mentioned will either demotivate managers and will not encourage them to control cost. So, yes, all these will be demotivating for the managers. So, production manager will feel unfair about it and say, okay, this is wrong. This is something wrong going with me. Yeah, this is a problem, definite problem. So see, everything has been extracted from the scenario. This is what I want you to teach. This is what I want you to learn. Link with the scenario. This is application based. If you are writing the performance of the manager, like favorable variance, like adverse variance, you are wasting your time because this is not that question. Yeah, I do agree. Very commonly examiner asks about performance assessment, but this is not the question. Yes, 9 marks are enough. You have to write in a paragraph form. You have to write in a paragraph form. These are just bullets for the understanding. Write in a paragraph form, write in a detailed way. These PPTs have been included today. You can check today. You will get these PPTs. These are attached. Plus, I've shared the PPT on the WhatsApp group as well. So, this is enough. You have to write in a paragraph form. And yes, once you will discuss these, because the verb is discuss, my friend, the verb is discuss. So you will discuss this in a paragraph form. Automatically things will be covered. These are just bullets for your understanding. Never write in bullets. Never write in bullets. No. Examiner prefers things in a paragraph form. I hope I made this clear. And what's your feedback? Did you understood the way I handled calculations on spreadsheet and the theory part? Always break a question. Always in a question, find out verb and object. This is the key. This is the key to success. Always find two things in a question. Are you listening? Always find two things in a question. Number one, verb and object. Verb and object. Secondly, see whether question is a knowledge based one or what? Or application based one. Knowledge based one or application based one. Always ask two things yourself. What do you need to ask? Verb and object. And second, whether the question is knowledge based or application based. So when it is a knowledge based question, you don't have to link with the scenario. Be general. Write bookish knowledge. But when it is application based question, so apply the knowledge in the scenario. Apply the knowledge in the scenario.